Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lenny and Bert, the Dividend Diplomats. We're going to answer a simple question today. Is this 5.3% yielding stock worth the hype?
Ooh, hoo, hoo, hoo. Smash that subscribe button. Give us a nice thumbs up. Bird's bringing us some heat right now, a little bit of fire with an over 5% dividend stock, a stock that actually has been increasing their dividend over the last handful of years. And you're definitely going to know what this company is and does and some of the big brand names that you may have even paid a visit to.
That's right. And we're going to be talking about VICI Properties today, ticker symbol VICI. Look, when you put a post out on
VICI.
yeah, VICI. Sorry, yeah, I didn't even say. I just assumed it spelled VICI. That's how heated I am right now. When you put a post out on X, when you put it on the YouTube communities, you put it out on Threads, and you say, "What's your favorite stock? What's your favorite high yielding stock?" This one pops up more than any other one. Everybody in the dividend community loves VICI Properties. Would you agree, Lanny?
You know, there are a lot of VICI lovers. Maybe there's a lot of you degenerates out there that love visiting a VICI property. Maybe you just like to take in a show. I don't know.
Yeah. So why is Lanny going down that route? Because they are a REIT. They own a lot of properties. They have a huge gaming presence. They have just under 100 properties, over 50 gaming properties in Vegas alone. Caesar's Palace, MGM, Venetian, Mandalay Bay, Luxor, Excalibur. I already said Caesar. So that's just some of the Vegas properties. That's not even all of them. Those are the big headline ones.
The
Huge
big
gaming
one.
presence, huge gaming presence. But it's not just gaming. They have other experience too. They're gaming and experiences. They have the Chelsea Piers in New York, which my wife and I visited when we did a New York trip at the beginning of April. And it's a very nice property. They did a very nice job there. I also have Great Wolf Lodges, Kalahari's, Lucky Strike Entertainment, a lot of bowling. So they are all about those big, fancy experiences for people to spend their money at, cash in, stay in the properties, just throw money at VICI.
You know, even though we have, I think, Great Wolf Lodge and Kalahari near us here in Ohio, I have not been to either. Have you?
I haven't either. That's actually not true. I went to a Great Wolf Lodge for a conference for some reason. For some reason, they picked a Great Wolf Lodge in Ohio for a conference, and it was terrible.
Wow.
But my
Was it?
kids, yeah, it was terrible. My oldest kid, probably the age where maybe this wintertime, find a nice Groupon or like a nice deal, spend a night at Great Wolf Lodge, but the family hasn't aged into that quite yet.
Spend a nice night here at the lodge.
The Great Wolf Lodge. So obviously these are massive properties. Let's see how their balance sheet's been shaking out though. So has they've been on quite the acquisition spree. This has been a recent growth in their portfolio too. Revenue, Lanny, everything shot up in 2022. Well, just to keep it general, we'll put the chart up here. Revenue, income, diluted EPS have grown significantly since
Oh yeah,
2022.
big
Even
time.
even debt, because that's when the acquisition spree started.
And debt.
Yeah, thank goodness, because that's when they got MGM. That's when they bought out their joint venture with MGM. Then they bought the Venetian too, and they have been off to the races ever since.
Yeah. Yeah. I mean, after all those acquisitions, as Bert said, going from 1.2 billion in 2020 to hitting 4 billion at the end of 2024 in revenue. Hey, this is one way to start trying to scale your business. Net income following suit from 900 million to 2.7 billion. There's no way they're earning 2.7 billion on 3.8 billion in revenue. We might have to fact check this.
Yeah, let me fact check. Let me go to our friends at Seeking Alpha.
Yeah, that just, to me, doesn't that just seem a little, that seems very impressive. That margin, I mean, maybe.
Oh, well, that's what Seeking Alpha says. I'm going to put the screenshot up from Seeking
Wow.
Alpha here so everyone can prove it. I'm not seeing millions versus billions on here, so it's all the same. I'm going to put
Right.
the actual screenshots up here, though, not our chart, just so everyone can prove it. And
So
then,
they are, Vici is just from a revenue and net income standpoint, yeah, they're crushing it. Now, as Bert said, from a debt level, going from 7 bill to 18 billion, obviously straddling up that balance sheet, with some debt to grow right now.
yeah,
It's kind of been consistent now since 2023. I haven't peeked into the first quarter earnings to see if they've paid down any of that debt, but I'm assuming that is in their cards.
Yeah, I know they just restructured some debt. They just refinanced it. Let's pull up the March financials here on Seeking Alpha. As we grab it, that total debt is 17.76 billion as of
So
March. So
it's
it's
grown a little bit.
yeah. So they're obviously not in the paying down debt. They're in the acquisition, grow their portfolio and grow their book. How is that translated over to guidance? That was the big thing. In their last earnings release, they provided an updated guidance. They
Mm-hmm.
increased their AFFO range slightly for on the low end and the high end. There was a slight uptick. They did and on the earnings, the AFO per share jumped up as
Yes,
well.
ever so slightly.
Yeah, and share count basically stayed the same, slightly up higher. So they're not planning on issuing a lot more shares to dilute everything. So it's a lot of their growth is going to come from increased revenues, increased growth within their properties and their book. There's nothing major it looks like in the pipeline for the rest of the year.
I tell you what, if the economy starts to shake and properties get distressed, if they're still sitting okay, they could be on a heavy acquisition spree as well by buying
Mhm.
assets for cheap. Not to say it like that, but to say it like that, they might be able to start really growing faster than what they originally planned.
Yeah, that's exactly right. And there are two sides to the how you can play a stressed out economy, right? You can be in the position, as Lanny said, where you can grow and you can do the acquisitions and you can pick up a lot of troubled properties and maybe make a huge splash that you weren't necessarily planning on. Or you could run into your own issues too. If people stop gaming, if people stop traveling, they stop having these experiences because their budgets are stretched too thin, you could see some potential weakness. However, I think that's mitigated by just the names of the properties that you're going after here. You're having the Venetian, you're not having the off Vegas strip casino that nobody's really going to during the time.
You know, People in the comments, if you've been to Vegas, how is it right now? Let us know if you feel like it's hustle and bustle still, if you feel like it's very quiet, or if it's not as busy as what you're used to seeing or what you would expect.
Yeah, and I want to expand that out too for people that live near Kalahari's, that live near Great Wolf Lodges, or people that know people. Are you hearing more vacations being planned to those places, or less vacations being planned as well? I think these are all great potential indicators for what's happening in the economy and potentially VICI's properties.
Yeah, what better than to ask all of us investors out here what we've been seeing, guys. This is how we can make everybody a little bit more knowledgeable too in the entertainment space. I know personally, yeah. I mean, I did go to my first trip to Vegas last fall, and it was slamming. Let me just tell you that.
Yeah, people have not stopped spending on vacations. People have not stopped spending on travel, no matter what's going on with consumer debt. It seems as if people just haven't been willing to sacrifice some of these experiences to pay down the debt. So,
Yep, I think that's fair. I think that's fair.
yeah,
But let's get into these
yeah,
dividend stock metrics.
sure. Let's look at it. That price to FFO ratio. Remember, Vici is a REIT. So as you use FFO, funds from operations, instead of earnings per share, that's the standard in the industry. So we pulled it from Seeking Alpha. That FFO is 249. That gives you price to FFO ratio of 13x.
Wow. Not too bad, actually. Not too bad, actually. I mean, it's probably very similar, I'm assuming, to realty income as well.
Yeah.
They do pay $1.73. This is kind of where it gets interesting because they only have a payout ratio to the FFO of only 69.5%. So
Yeah.
a lot of earnings there that isn't going back yet to the holders. Plenty of room to pay and grow that dividend.
And that's what they've been doing. That 5 year dividend growth rate is 7.73%, and they've increased that dividend for 6 consecutive years. It's a very high growth rate
It is high.
for a REIT. And it's not an unreasonably high growth rate. That's just a very solid, fair increase for a company in the REIT space, which is nice to see.
you know, Given the state of everything, do we still see that type of growth rate that's above 7% growth rate right now? What do you anticipate, Bert, just from your opinion here?
I would probably say is slightly below that. I think it's going to be hard to really juice up your dividend, especially if you think something could be coming down the pipeline, or even if you're going to have to refinance some debt at a higher interest rate. You're not going to have room to pay higher interest for debt that may have been issued at during the low interest rate environment to now. Things have changed, no matter what you want to say. Um, least
Yeah,
unfortunately.
I agree. I agree. I think you're not going to see that 7.73% average growth rate. I think you see the 3 to 5%.
Yeah, I think that's fair. Their yield is, as I said earlier, beginning of the video, is 5.3%. So you take 5.3 with a 7.73% 5-year dividend growth rate. That is fantastic.
Oh, you take that all day, guys. I mean, that's a great combination because, again, for you realty income lovers out there, yielding around that 5 to 6% and usually get around a 3 to 4% dividend growth rate. So this is, definitely on paper, it looks really, really solid. Up year to date, almost 12%, up 15% since last year, up 46% since 5 years ago, guys. So
Yeah.
not outperforming the market, but they're performing decent here over the last year, 5 years, and to date.
Yeah. So we entered this video asking, is Vici worth the hype? And we leave this video, fantastic property portfolio.
Yeah.
They're growing revenue, growing earnings, growing FFO. They just increased their guidance. The metrics look great. In the REIT space, they have a fantastic dividend payout ratio. They have fantastic dividend growth and a 5% yield. I would say yes, VG is worth the hype, and I see why investors love investing in VG.
Yep. I would have to agree. Just the metrics don't, there's nothing that's like too good to be true. Again, even if earnings weren't as good, the payout ratio seems okay. They don't have to grow the dividend as much because they have such a high yield. They are performing,
Yeah.
more than likely performing above peer. Because I don't think realty income is performing anywhere near these metrics. So I would say in the REIT space, probably performing above peer.
Yeah. So if there's a pullback in the stock next time, I know when interest rates go up, REITs will drop. So next time there's a chance to get VG on sale, it might be a great time to initiate a position and pick up some strong dividend yield.
Yeah. Let us know what you guys think about VICI properties. You think it's a buy right now? You think it's a hold after going up 12% this year or 15% since last year? Or do you think this company has more room to run? Let us know what you think about the dividend as well. Do you think there's still the same 7 to 8% growth that shareholders has historically seen the last 5 years? Holler at us in the comments below.
If you already subscribe to the channel, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.